client, you pay for an airline ticket, and there's the government or your CPA will tell you what you can write off as an expense. This is an old term, and some of you may still do a general ledger. I don't know many people who know how to do a general ledger or who really cares about a general ledger. It's a fundamental document in accounting, and what it was, the Wikipedia says a general ledger, sometimes known as a nominal ledger, is the main accounting record of a business which uses double entry bookkeeping. It usually includes accounts for such items as current assets, fixed assets, liabilities, revenue and expense items, gains and losses. Fortunately nowadays, your software will take care of all this. So I just put it out there because someone may mention, do you know general ledger, and you really don't have to do that. Your accountant will worry about that. So why use QuickBooks for accounting? It integrates all the accounting needs I discussed, and you don't have to understand the general ledger, and also you can integrate with other financial services, such as maybe your company wants to do an e-commerce site. You can integrate with that. Your point of sale system, it'll integrate with that. And so what's nice about it is that as you grow as a business, you can add on to it as needed. Investor relations. So what QuickBooks can do, it can generate reports, and the reason I say about investor relations, my opinion about a small business, unless you're really a true mom and pop operation, you really want to grow it and get investors to come to your company or get investors to invest in your company. What QuickBooks will do, it'll generate the reports they want to see to make sure that they know that your company is doing well. Also, the QuickBook files can be used by other companies. If you, say, get bought out by someone or you merge with someone and they don't want to take over your accounting system, they like it the way it is, they'll integrate with your accounting system through QuickBooks, and it's a universal file. So most accounting systems will be able to integrate with the QuickBooks accounting system. When you work with your CPA, and that's the first person you probably talk to when you start a business, because he'll teach you how to set up all your legal paperwork and such. What's good about QuickBooks, you can actually send him the file, and what he can do with that is it'll help him prepare your quarterly taxes and make sure that you're accounting correctly, and he also will be able to see your business and maybe do some analysis on your with respect to your business model. Most CPAs understand QuickBooks, so probably recommend it. You also can do another really neat things with QuickBooks, quite easy. You can set up through your bank, you can set up credit card acceptance. And what's really nice about that, it's very professional. When you accept credit cards, what you can do is you can, say you work with a government agency, a lot of times they under $2,000 they'll buy something with a credit card. Well, that's really convenient, and that money goes straight to your bank account too. And the credit card company, however, charges you for this service, but it's really a nice service to have. And I used a credit card service and was really, I know. Okay, well, I'm going to, let's see, sidestep that. So testing if you're ready for a small business. You have to look at the amount of current capital you have. Obviously, they say something of a measure is that if you're going to hire employees, you better have 2 years of salary. Better have a business plan. A lot of people don't have a business plan, and QuickBooks will help you with this. I think QuickBooks has a business plan in front end. There's other pieces of software that will help you prepare for your business plan. And I'm way over time, but I'm just going to do this because I wanted to show you a balance sheet. This is from Google Finance. And what's interesting, I like Google Finance a lot. I think it has a really neat interface. And if you're interested in reading numbers of how businesses work, I wanted to show you something really interesting about Google compared to Microsoft. And what I'm talking about, assets. Google, in the last 3 years, went from 10.2 billion in assets to 31.7 billion in assets. Now, you also have to say that's not the full picture. You have to look at their liabilities. But their liabilities are trivial. There are 852 million in liabilities to 3.5 billion in liabilities. So obviously they're doing really, really well. And so when you look at their total equity, how much they're really worth, they're 28.2 billion. And they were worth only 9.4 billion in, 3 years ago. Okay, so now, with respect to Microsoft, what's interesting about them, their assets were 67 billion in excuse me. Their assets were 70.8 billion in 2005, but 3 years later their assets were 72.7 billion in 2008. Obviously they haven't grown that much. That's what a lot of investors are seeing now. But another measurement of that they have going against them, their liabilities increased from 16.8 billion to 29.8 billion. So effectively, their total worth actually went down from 48.1 billion to 36.2 billion. And these figures, if you go on Google and look at their finance, these figures are what your business is going to produce if you want to get investors. You're going to have to understand every figure on this sheet as a small business owner if you want to be good at accounting. Where you start with is online. They have tutorials of QuickBooks. Go to Google Finance, and after you get used to understanding the terminology, you're ready to start a small business. Thank you.
Thank you, Charles. If we could have 1 minute for time to write evaluations.